All right. Hopefully, looks like you guys can hear me. So, welcome back. It's September 24th on Wednesday. Thank you guys for attending this video. Um, Hope you guys are having a good week. If you guys have not already done so, like, comment, subscribe, and join my free Discord. I share valuable information for free in the Discord, so join the community if you guys aren't already a part of it. In this video, I'll give you guys some updates on, um, the current state of the market that I trade or participate in that's in my watch list. I'll share some quotes with you guys that I think is interesting. Um, there's something that I also wanted to share, with you guys. I can't really remember, so hopefully I start to remember. I should probably start writing things down before these videos. Um, All right, so let's see if I can remember. In the meantime, I'll pull up my trading view. Oh yeah, I remember now. So I think everybody, or not everybody, but I think a lot of traders are not getting to the point where they want to be at, including myself, which is something that I've been working on for quite a while. I've actually been working on this for years, and if you don't address it, it's almost like, oh, I dropped something. It's almost like I honestly want to compare this to, we could go there. I'll compare this to the healthcare industry. So let's take a company uh from the time that I've done research on it. I want to take Actually, I'm not gonna. I don't know if I want to go there. At least not at this time. I won't go there because if I do go there, then I'd rather be lawyered up before going there. So since I'm not gonna go there, I'll just give you an example, and I won't name names of companies, but there are companies, big healthcare companies that, for example, are in, right? You're in the healthcare industry, so you could imagine that they're looking to help people get better and possibly be cured, right? Cure whatever illness they have. But there are companies that are designed solely to treat conditions instead of cure conditions. And in the better interest of people, we want to ultimately, if we do have an illness, we want to find the cure instead of the treatment because if you're only helping people treat their illness, then you'll be in profit long term, which is clearly better for the business, and it's not so good for the consumer or for the person who is ill. So, in for instance, if we put this into perspective as a trader, the illness that I'll refer to as a disease or a sickness would be risk management. If you don't learn how to allocate risk or when to even allocate risk, then you could pass the threshold of being borderline insanity in my experience. Um, or instead of me considering it as borderline past being borderline insanity, I would consider it being maybe dishonest with yourself. Um, Or, I mean, simply just lacking the right risk management skills. Maybe if you're not studying risk management, um, maybe you're not aware of why risk management is important, regardless of how high your percentage win rate is. You're just gonna be in a cycle. You're gonna be the hamster on the wheel that just keeps on spinning, not going anywhere, but feels like you're going somewhere. So you can be the trader who is in the markets for 10, 15, 20, 30 years, and you're just continuously going in the red, right? You're negative um $10,000 in 2010. Now it's 2020. Instead of negative $10,000, you're negative $50,000. But you feel like you're improving just because of the amount of time you took out of your day to take trades or to place trades. And you might be conditioned by society, by your friends, or by your family. You might be conditioned to you might feel like you're going somewhere when truly you're not, just because of the amount of times that you've been so-called a trader. Um, so I think the topic of today is going to be mainly on risk allocation, when to incorporate, you know, proper risk, and maybe even when to scale out, or when to size down, when to size up, when to be, I would say, uh, when to be at equilibrium for risk, right? Equilibrium, when I say equilibrium, I mean being in the middle of, like, let's say you have an A plus setup, a B plus setup, and a C plus setup. So this is where it comes to, if you were to create a risk grading chart. So a risk grading chart, and I'll show you an example of that. I'm going to share my screen. So a risk grading chart would look something like this. I hope you guys can see my screen. Okay, you guys should be able to see my screen. So I'm going to give you guys an example of a risk grading chart. All right, so a risk grading chart would be something like let me do uh, I need to get a white chart. Okay, here's a white chart. Okay, because I don't like how that had timeline stuff on there. So a risk grading chart would look like this. Let's say, ah man, here. Let's say you got A, you got, make this black. Oh man. Okay, you got A, you got an A plus setup, you got a B plus setup, and you got a C plus setup. So you have three different reasons to either up your risk or go down on your risk, or stay in the middle, which is where I would call equilibrium risk assessment. Um, let's say, all right, alarm just went off, but all right, so let's say if you were to have three different ways that you would allocate risk. You can call these three different strategies, but I also look at them as a way to assess risk differently. So so that like, let's say for example, A plus setup would be, excuse me, I'm gonna give you guys examples, but you guys can put this into your own system. A plus setup, let's say I do 3% risk, right? B plus setup, I might do half of that, so 1.5% risk. And then maybe a C plus setup, I might do half of 1.5, which is 0.75% risk, I think. I just created the C plus um into my grading chart, so I'm going to check and make sure that that's correct. I'm not a math wizard, but I do study numbers on a weekly basis. So, grading chart, I don't know. I'm gonna do grading chart. All right, so we got what is what's 50% of 1.5? 50% of 1.5 is 0.75. So I incorporated this C plus risk allocation grade into my system. So now I'm gonna be deciding, I'm gonna decide whether I'm gonna use this one, or this one. And that's gonna depend on this, or this. So for example, a reason to do an A plus setup is when all of your, confirmations, let's say it's a pullback and it's a reasonable um point of interest, right? If the market has moved in ways that look like this, see boom, 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 breaks out, boom, pulls back, boom, 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 right? Then it goes boom, boom, right? Boom, starts consolidating here, boom, boom, boom. You might take an entry here because you've had reasons to consider this being an area of interest. So, right, you got one reason, you got two reasons, you got a third reason, you got maybe a fourth, but also I would call this maybe a fourth reason. And then, a confirmation could be that you've got an outbreak. So let me erase this right here. Oh man, it took out the whole thing. What I wanted to do was show you guys that let's see. Oh, so this was a breaker structure or a market structure shift. So you can see, this would be a new low, a new high, a new low. This would be a high, and then the pullback from that high would be here, which means you might consider this level here to be important, which could give you an entry signal. And being that you see this series of events happening, this could be a reason for you to consider it as an A plus setup. Now, if you let's say you're trading um in a in the phase of the market where markets just keeps on distributing, you're in the distribution phase, then you might not get all of these series. The series that we're looking at here is accumulation, manipulation, and then distribution. So depending on which phase you're in could also depend on which setup or um which grading series that you feel like using, right? If you think that you're in the phase of manipulation, and that's a part of your system, then maybe that could be a B plus setup. If you think that you're in the phase of an A plus setup, which could be your distribution phase, then maybe you want to use 3%, right? An A plus setup. Maybe you might consider it as an A plus setup because you've already had more than enough confirmations that can that makes it your way of considering it an A plus setup. Maybe a C plus, could be the manipulation phase where you don't think you're in the accumulation phase. You also don't think you're in the distribution phase, but you think that you might be in the manipulation phase. Possibly that could be your C plus setup, which could be, you risking instead of 3% or 1.5%, you might risk 0.75% just because it's a little bit more riskier than going in as the A plus setup or the B plus setup. So I think that it's important for us to know how to allocate risk and when to allocate risk. I just explained something that took me years to understand. And this comes with creating a mental framework of a forward thinker that can think on their own without depending on other people. This is important because it helps you be an independent, right, person, which is pretty much it's my goal to be an independent person. That's one of the reasons why I'm 1099 and I like to work on my own terms in terms of time instead of and being and having the ability to work around the clock on my own terms. Instead of punching in, clocks and like other things like that. That's just in my opinion. But everybody has their own other, opinions, and I respect that if you're someone who, you know, is dependent on someone else. Everybody has their own world. In my world, I feel like, I think that it's just the right thing to do for me to just be a dependent thinker. And to insert on that note, I think that, we were created to, I'm just gonna say that, my th- I don't just doesn't sit right with me. I'll just leave it as that. It just doesn't sit right with me too, because I feel like if you give people the opportunity to put money on the table for you, it also allows them the opportunity to take the money off the table from you as well. That's just all I'm gonna say from there. Take what you want from that, and that's pretty much what I'm gonna do and leave that there. But um, let me give you guys some quotes on that note. So I give you guys three quotes, and this is gonna be it's gonna be coming from the Market Wizards book. Okay, here's one. So this is when Richard Dennis got interviewed. Um, He was asked, is that something you would advise other traders to do to improve? That is, keep track of what they are doing right and what they are doing wrong. He responds with, sure. The trading experience is so intense that there's a natural tendency to want to avoid thinking about it once the day is over. I am that way when things are working, but when they are not, it spurs me to want to think about what I am doing and how I might do better. When things go bad, traders shouldn't stick their heads in the sand and just hope it gets better. Now, let me give you guys an example of that. I have to give you guys an example of that. First, I'm gonna give you guys First, I'm gonna give you guys the meaning behind that. So it says I typed in Google. Hopefully you guys see that, yeah. And you guys hopefully can hear me as well since okay. Thank you guys. Yeah, you guys can hear me. So this is on Google. I typed head in the sand. To have your head in the sand means to ignore an unpleasant reality or problem, hoping it gets better. or hoping it will disappear rather than facing and dealing with it. Think of think of an ostrich in the sand, right? Sticking their head in the sand, sticking their head under the ground. It's almost like you don't want to look in the mirror. Look at this. You don't want to look in the mirror. You just want to be unrealistic. You don't care about what people say, which should be, important to you. Somebody's calling out the elephant in the room. You might want to hear what they want to say. At least. I mean, you don't have to, you can take it with a grain of salt with what people say and stuff like that. It might be like, you know, it might be a kid who's like 3 years old, saying you're fat. I mean, it might not be a nice thing to say. You might not want to hear what they're telling you, but that could be a sign. Maybe you are fat. Maybe you want to get in the gym. So these are important factors to note. And don't be this guy. He's got his head all under the sand, and he's like he just doesn't want to be realistic with himself. If you're bumping into challenges, you want to study those challenges. You want to face your demons. Once you face your demons, then the doors start opening for you. There's different doors that start opening up for you. The demons that I've been facing and have been challenging for me is risk management. For the past like 6 years that I've been personally trading, I haven't been realistic with the way that I've been, allocating my risk when it comes to my trade by trade, uh, philosophies in, my risk assessment. It's been shady, it's been dishonest with myself, and the more honest you get with how you're risking your money when you go to trade, um, I think it only gets better once you start facing the reality of accepting risk, right? You want to question yourself before I get into this trade, how much am I risking of my account's equity? Those are the types of questions that you want to ask yourself. And I'll type it for you. These are the demons that the demons you're facing is the type of demons that you want to study. And I say demons because they're it's the questions that are the questions that should be the elephant of the room type out the room type of question. It's the questions that you should have answers to. It's almost like it's almost like somebody saying, um, it's almost like a doctor, right? If you're speaking with the doctor and or maybe not even doctor, because there's a lot more shady business I would say happens in the healthcare field than, but there's also in every field there's shady business, honestly, let's keep it real. Let's say you're speaking to a lawyer who's trying to help you with your case. And you're speaking with this lawyer and he's like, "Okay, I need you to tell me everything from A to Z." So you have to start from scratch. You have to explain to this lawyer so that he can help you out with your case. Um, and if you leave a stone unturned, then you're gonna be at risk for maybe getting sued or whatever the case may be, maybe losing the case and being, um, charged. So you want to make sure you consult with your inner demons. Those inner demons are these questions that you want to be answered. And you need to be the person who answers these. If you want to be an independent thinker, if you want to be long term, um, wealthy or profitable, these are the questions that you have to be honest with yourself about. So you have to say, okay, let's say, look, do I have let's say general idea of the overall trend? And maybe by trend, you want to be on the higher time frame. Excuse me. You might be on the daily time frame. Boom. That's one question answered. Two, second question you might want to ask yourself. Um, where is the or what, let's say what phase is the market in? Accumulation, right? Accumulation, I think that's how you spell it. Um, manipulation, distrib distribution, reversal, or continuation. All right, so how do I make this? Okay. So here's two questions. Or I mean, this second question is a bit longer, kind of asks you in different ways, how to answer this question. Do you think the market's in accumulation phase, manipulation phase, distribution? Are we possibly reversing, or are we perhaps continuing to the upside or to the downside? Um, and then, once you start learning these different ways to think outside the box and answer the questions that you think is necessary to, you know, is necessary to how you're gonna participate in the market, then, the doors start unlocking, they start opening up for you. And I genuinely think that the only way to get into this type of mindset, to adopt this type of mentality, you have to, like, honestly sleep, breathe, eat the markets. I can't, I don't know any other way to, I don't know other way to say it. Um, unless you were to maybe, go to a coach, a trading coach that provides you with maybe day-to-day information, or find a coach that can um give you the whole rundown on, you know, candle by candle, if they have time for it, um, then that's a solution for you to cut down the time. I think the type of videos that I'm posting, they're definitely valuable, and it is a good way to get my word across on how to trade. But at this time that I'm at, in the phase that I'm at right now, I'm not, looking to be, currently I'm not looking to be, speaking with people, taking phone calls with people, because I definitely know a lot of people who are open to being coached and, mentored by me personally. But at this moment right now, I'm still reading a lot of books. I still have another business that I'm also, I do have clients that I've wrote a lot of policies for, in the insurance industry. So I have, businesses that I also work with. And then, keeping up with your health is also priority for me personally. I'm I do boxing classes. Um, I can find time, right? I can create time, but I don't know if that's something that's still me working for people. Like, I'm not sure if I want to work with people at the stage that I'm at right now, and put that over me being a, you know, I just don't, I don't know. I mean, that's just where I'm at right now. Um, I might consider it in the future, but, there are a lot of people out there that are open to teaching people on a daily basis and taking time out of their day to teach people. I'm still one of those people that are open to, helping people, but I'd rather do it on my own time and share, value on a weekly basis, which is still investing time into you guys, for all the people that's watching, is just from a distance, right? It's from a distance, and I hope people can respect that. But it's free value, so it's still important information. And a lot of the things that I share with you guys are things that these people are not, like, their frequency is probably a lot of times not there yet. There's very few people who think like this and know that this stuff is the right information. But then, most of the other gurus and stuff like that, they're most likely, I don't know, getting paid from like, companies and stuff like that by trying to sell stuff or just creating their own, stuff to just sell their products and services. But um, what other questions can we ask? So, other questions we can ask are maybe, are we, let's say, do I have the general idea of the daily overall trend? I mean, honestly, the second, I mean, I would probably, I'm not, I don't really put this in order just because I've been doing it for so long. But if you wanted to put it in an order, you can say, are we overall bullish or bearish on the daily time frame? And I think number two, the question for number two is also pretty similar to number one. Because if you have a general idea of the daily overall trend, that should give you a confirmation of whether you are in a bullish or bearish, um, in a bullish or bearish market. How can I, cycle lines, time cycle, sidelines? Oh yeah, I don't know if that is what I was looking for. No, it's not. But this just gives you an idea. I gave you three simple questions to ask yourself. And these are the type of questions that I would refer to demons, that you want to confront. So confronting your demons helps you get to the other side. It helps you get to the side of profitability. It's almost like, I'll give you an example. It's almost like when I was introduced to, doing, I wouldn't say introduced to doing sales, but I would say introduced to doing cold calls. Because I did sales when I was in like high school, when I was going to Springfield High School. Um, it was sales, but it wasn't sales. So it was like, for example, I did this thing where I would like, it was like kind of like a charity, like, selling candy. I think that's in the sales type of environment where you just go up to random people in the parking lot asking if they, are open to buying candy from you because you're supporting charity. So that could be, something that is uncomfortable for most people, right? You're not going to see most people speaking with people, asking them for money to support your business or support your charity that you're, in support of. Or, like I was going to give you the exa analogy of, my experience with being a first time cold caller. I was not ready for, speaking with people over the phones. I would wouldn't really know what to say. A lot of times when you don't know what to say, you get a lot of dial reluctancy, and dial reluctancy does, people can hear when you have dial reluctancy, and many times, in most cases, people who you call, if they notice that you have dial reluctancy from your tonality, they're most likely not going to do business with you because, if you're not a figure of authority, expert in your field, and sharp as a tack, 9 times out of 10, the person's not gonna buy from you. And that does not include, the 5 to 8 to maybe 15 times that you're most likely gonna have to get in contact with that person who would buy from you, the person who is interested in, so that's a lot of, it's a lot of things to take into account and consider. But that really just gives you a perspective. You really just want to be objective. So be objective about the questions that you ask yourself. Do I have a general idea of the overall, daily overall trend? Are we bullish? Are we currently bearish on the daily time frame? What phase in the markets are we currently in? Are we in the accumulation phase, manipulation phase, distribution phase, reversal phase, or continuation? Example of that would be, I'll say, let's say an example of accumulation phase. Are we in the accumulation phase? Accumulation phase would be here, consolidation. Let me redo that. I'm going to ask my question that again. Are we currently in the accumulation phase of the market? Oh, we are? Okay. Maybe I'm not going to trade. Maybe I'm not going to trade until we get to my, mm, My B plus or my C plus setup. Um, uh, let's go with B plus. All right, so maybe my B plus setup is boom, right? This is the manipulation phase. Maybe my B plus setup is gonna be the phase of manipulation, all right? And then let's say price comes down to this level or this level. So you might be a person who wants to take, this right here, right? Because you've seen that there's been a lot of times prices has gone to this price quite a few times. So one time, two times, three times, four times, five times, six times, and then finally breaks out, comes back. You might want to enter here or you might want to enter here, just depending on maybe time, just maybe based on imbalances in the markets before considering a move to the upside. And then, so let's say we got this is going to be A. So A, this is going to be B, manipulation, or I said B. M, manipulation, accumulation, manipulation, and then you got distribution. Boom. Right. So let's say you entered on the manipulation phase. Now your stop loss will be here and your entry here. So entry, stop loss, take profit either a high or you just hold until the market just keeps on going up and up and up or down and down and down, depending on the direction. This is obviously bullish trend. And then, you know, but yeah, let's say I went in as, this would just be an example of the risk grading chart, risk allocation, when and where you allocate risk, why you might be allocating risk, which kind of correlates to when you would be allocating your risk. What type of risk are you going to use? I might say, hey, we're in the phase of manipulation. For my manipulation phase, I use this is going to correlate with a B plus setup, which is a 1.5% that I risk on this trade. Boom, 1.5%. I've accepted the risk of risking 1.5% on my account. Um, yeah. Now, maybe you might be in the distribution phase. Maybe you missed the manipulation phase. Maybe the manipulation phase, the B plus setup, is not in your it's not in your strategy. It's not a part of your system, or maybe you just missed the manipulation phase. You might be, able to get in on the distribution phase, which could potentially give you a better risk to reward because you have a tighter stop loss, but it could also be a little bit higher just because you don't exactly maybe you might not know exactly where the market is headed. So I think trailing stop loss could be helpful for you in this case. Um, it really just depends, and then from there, I mean, you might be targeting a higher or a specific high, or like I said before, just using a trailing stop loss to just keep on, lengthening your profits or maximizing your profits by, you know, using the trailing stop loss until your stop loss is hit. So there's different ways to go about it. You just have to get creative, and this is what I mean by inserting independent thinking into your thought process and not wanting to really rely on people's signals and stuff like that. A lot of times that's the reason why I don't even nowadays I'm not really even, you know, excuse me, using a take profit, right? If you are in my Discord, if you're in my free Discord, you know that, nowadays you're not really seeing take profit numbers because I just don't I don't believe in um using take profit in your position um when placing a trade, because if the market wants to, let's say let's say you got in this phase right here. Honestly doesn't really matter what phase you get in, because the market could be going up all at once. But let's say you got in at manipulation. Now you're at a 1 to 9, or let's say because your stop loss is here at manipulation. Now you're at a 1 to 2. Market pulls back. Maybe this was a high that you wanted to target, right? Boom. TP hit, right? TP one hit. You might say, all right, I'm gonna take off. This is a 1.5% that you're risking, so I might take off 0.75%, or not 0.75, 50%, which is 0.75%. So 50% of 1.5% you take off at take profit. The rest you let it sit. You let your trade work for you, right? So while your trade is working for you, you're still profiting, profiting, you're profiting, you're profiting. Boom, right? You hit another um you hit another high, market creates another high. Distribution phase, right? It starts going up again. Boom. Now you see the risk to reward. Before, your first high that you hit was about 1 to 2. Second high you hit was 1 to 4. Third high you hit was 1 to 6. And then that's how, the market just keeps on moving into your favor, and your profits just keep on growing and growing and growing and growing. So you almost seem like, you appear to be an investor at that point. But realistically, investors are usually, people who are holding trades for, or securities, just so that it's a universal word that you can use when taking this as an example. Is usually, investors are people who are considered investors because they have held on to a security for usually, about 12 months or more, somewhere, something like that. So, um, but yeah, this is how, long term you start to truly see, um, being a profitable trader. And this is an important skill to have. So I think that you guys are gonna want to take into account. This is coming with years and years of, 6 years plus of my information, my failure, my setbacks, my losses, same as failures, my prop firms that I failed, my live accounts that I blew up on multiple occasions, um, my my days of having my head in the sand, probably looking like this guy right here, not wanting to face reality, not wanting to look in the mirror. There's so many different there's so much time that I took, like not even reading, not educating myself on risk management, not wanting to be the independent thinker, and wanting others to be, uh, the signals provider, or and not wanting to do my own research on information, terminology, things of that nature. So, here, let me show you guys about two more different quotes that I think are important, and then like, comment, subscribe if you guys haven't already. I hope you guys learned something from this video. And if I get questions about, if any of you guys ask me questions about things that I are already, addressed in other videos, then that's gonna just tell me that you guys aren't being grateful for what I'm giving out for free. Like, I'm giving you guys value, and I've been giving out value since last year, November, 1 week at a time at least, because from my notations, I'm pretty sure I've been putting out at least one video per week since last year, like November, December. So if you guys aren't taking advantage of the free value, if you guys aren't joining the free Discord, then that's on you. And if you guys are gonna ask me questions that I already answered, I'm just gonna tell you to look back at the videos that I posted on YouTube. That's gonna be my answer. And it's a fair answer for me to uh respond with, because I am giving out free value at the end of the day. And I'm taking time out of my day to do research on the right information, and I'm getting asked questions that I already answered. I think that's unbelievable. I think that's unfair, and I think it's a waste of time. So I think you guys should look back. If you guys are gonna ask me the same questions that I already asked, I think you guys should partake in the videos that I provide for free and take the take decent time out of your day to watch the videos. Just watch the videos. Think it's unfair. But yeah. All right, let's see. Okay. Here Richard Dennis was asked, otherwise, or here Richard Dennis, I'm just gonna go right into the quote that he said instead of asking the question, reading the unimportant things here. Not that it is truly unimportant, but I'm just gonna skim through it. He says, "You should expect the unexpected in this business. Expect the extreme. Don't think in terms of boundaries that limit what the market might do. If there is any lesson I have learned in the nearly 20 years that I've been in this business, it is that the unexpected and the impossible happens every now and then." So this is another way that I can give you guys a picture of what type of person you should be versus the person that you shouldn't be. A lot of times in this industry, you can tell, what the elephant in the room is. And you don't want to be the elephant in the room. Let me show you let me show you a difference between the people who are the elephant in the room and the people who are not the elephant in the room. So elephant in the room meaning, boom. If you say there's an elephant in the room, you mean that there is an obvious problem or difficult situation that people do not want to talk about. A major problem or controversial issue that is obviously present but avoided as a subject for discussion because it is more comfortable to do so. So you have to be uncomfortable. The people who get out of their comfort zone and get out of their own head, and they don't want to, and you don't want to be the person who, is the enemy, but the enemy is could be the person between your own two ears, which is you. The enemy between your own two ears is you. So let's look at how that looks. Let me, because I think when you start seeing things, you start seeing these things. These are the things that I had to see. Um, These are the things that I had to see in order to start getting the bigger picture and being more accountable, right? You want to call the elephant out in the room. If the elephant is making a mess of the room after the custodian just came from the room and cleaned it, and you're calling the custodian to clean up the mess over and over and over and over and over and over again, instead of telling the elephant to get out the room or calling animal control to get this animal that is making a mess of the community or of the society or of the country, then they're gonna keep on doing it, keep on creating a mess, keep on being problematic. So don't just address this person or address the elephant in the room, address your mindset or address your mentality. Don't be the person that just keeps on allowing this elephant in the room to take control. Um, and yeah, uh, I got another one for you. So this is in addition to this quote. I'm gonna read it to you again so that you remember. So you should expect the unexpected in this business. Expect the extreme. Don't think in terms of boundaries that limit what the market might do. If there is any lesson I have learned in the nearly 20 years that I've been in this business, it is that the unexpected and the impossible happens every now and then. So um, this would be in reference to, so definitely it relates to this quote. Um, All right, so I would say, how can I look at this picture in a different tab? All right, well, that's not gonna work. That's not gonna work. All right, well, I'm gonna just let me add to this. Boom. Right? If you see a big shark and you got these tiny fish compared to the shark, it's tiny. Wouldn't you agree? Sharks don't always stay put in one place. Many species travel long distance for various reasons. Notice how it says various reasons and it doesn't specify the reasons. Notice how it says for various reasons. So this is how you kind of get the picture that Mark Douglas kind of painted for you as thinking like the casinos. Like, it doesn't exactly matter what the reason is for why the market is doing what it's doing. Don't don't make decisions. Don't make financial decisions. Don't place positions on things that you always hear. You also want to see what they're doing. The ability that we have to see what these people are doing, maybe hedge funds, maybe institutions, maybe inside traders that are the people who are moving the markets. If you look at what they're doing instead of really listening to what they're doing, like if you only go and make decisions just based off of what, they're saying on Yahoo Finance and things like that, uh, or you might see news on what XYZ has done, um or has said, right? You might see somebody, uh, an important person. You might see an important person, a high profiled individual who does an interview and is asked about a certain market and what he thinks about it, whether he's going to go short or long on it, whether he thinks it's a good idea or a bad idea. And this person might short it, and you might actually see the footprints in the market, which could be completely controversial to what they said in their interview. And so that's what I mean by, you want to have this type of mentality where you're you're trading with this type of person. Um, Many times, you're gonna want to do that by going based off of what you see them doing and not what they say they're doing. So you want to be, you want to be the fish here that are going with the direction of the bigger fish, which would be, in other words, instead of bigger fish, that would be the shark. So being the shark, being the lion, not being the gazelle, things like that. Um, if that makes sense, I hope that does, but that kind of gives you an idea. Trading with the trend, not trading against the trend. This is why my Instagram account is Trend with Ant. Trending with me. You're trending on the frequency of these people here, the bigger fish, the shark, the these people right here. These are the hedge funds, these are the institutions, these are the insider traders, these are the politicians that have a salary of 150,000, but they have millions of dollars in their trading portfolio. So these are the people that you want to follow. And this is the way to get on the opposite side of where you're at now if you're not profitable and you want to be on the side of the higher side of probability is by seeing what they're doing, acting accordingly instead of, just only going based off of what they say. But in order to do that, you're gonna have to learn how the market operates. You have to. The hardest part was literally that for me personally was learning how the market operates. But yeah, I think I might close it out on that quote. I hope you guys learned something from this, and until further, video that I drop, uh, that's all that I have for you guys right now. Um, and like, comment, let me know what your best takeaway from this video was. I hope I gave you guys some good information, and I hope you guys are able to consider something from this video, taking it away and putting something into, your skill, advance your skill. Think of it like Temple Run. You know how Temple Run you had like how you had to like unlock these different characters? I think of that a lot. Let me see if I can find a picture like that. Temple Run unlocking or locked character. Maybe even Subway Surfer. Man, this is old. I looked up Temple Run locked characters, but it didn't show me like I could have sworn like it was like it wouldn't be like the players wouldn't be highlighted. But I mean, you see how it says purchase, unlock, play, right? You can play as Scarlet. You have Scarlet unlocked, but you don't have Usain Bolt unlocked. You don't have Santa Claus unlocked. In order to unlock these characters, you have to put skin in the game. You have to invest time or you invest money. You can, invest, you can do one of two things. You can invest time, you can invest money. The way that you can consider while not investing money is by trading on a demo account. That allows you to at least journal your trades, journal where you're messing up at. Um, Personally, I didn't go the demo route. I decided to take matters into my own hands and, I I risked my capital and I invested money, sacrificed money, which I think, in my opinion, or in my experience, I learn more. I learn better than I do putting money at risk than I do when I don't, if I don't put money at risk and, trade with like free capital on a demo account. Um, Another way that I would give you guys would be, I think most people have seen this game or played this game. For those of you guys who are watching, not really too sure on what age bracket right now my YouTube watchers, viewers are, but let's say you're in this is today's shop. You guys should be able to see this. This is Fortnite. You're looking through, you got to put some skin in the game, right? You have to invest your time, which is free. At this point, Fortnite is free. So if you invest time into playing the game and you're going through these different seasons, many times when the season's over, and you've invested your time in the season, you'll get, you'll get free coins and you'll be able to use those coins. Um, for the most part, if you have enough to, unlock specific things with your V-Bucks. But, there you could be someone who wants to put up their own capital to unlock these different characters or items or cars or shoes, or hammers or backpacks. So I just want to give you guys, realistic expectations on what you should have, um, on what type of, options you guys have. I'm actually grateful that, there's different ways that you can go about this and being an independent thinker or an independent trader. So there's different analogies that I can ramble off for days, and it should resonate with a lot of you. But um, at this point, you know, this is where I'm gonna stop the video. But again, hope you guys learned something from this video. Like, comment, subscribe. Join my free Discord. I'm not sure. I'm honestly not sure what the next video is gonna be about, but I don't know. I'll think about it. I mean, I read a lot, so I'm sure I'll come up with another thing. If you guys have anything specific you guys want me to go over that I have not gone over yet, then comment below. Until next time, though, hope you guys enjoy your day and thanks for watching.